Welcome to episode number 141 of Let's Talk Stocks. And today I want to share with you some insights about binary options, the truth regarding binary options. Are they scam or are they legitimate? And my goal here today is just to share with you some insights to protect you, to give you some insights about these trading vehicles so that way you understand what you're doing and what you're really getting into. Now, I think before you go any further, it's really important to really understand how you classify a scam because there's different levels. At certain levels, some people just get taken advantage of completely and they're, totally wiped out financially if we're talking about financial scams. At other levels, it's actually possible for you to be able to be successful, but the odds are not in your favor. So, for example, if you're starting a business, is it really a scam if more than 90% of business owners fail? Because when you look at a restaurant business, so many business owners fail in the restaurant industry. It's a difficult business. It's a difficult industry. Yet people still don't classify that as a scam, right? Because it's a legitimate business. Now with binary options, the same thing kind of happens and occurs. Can you make money with binary options? The simple answer is yes. However, the odds are stacked against you. So take, for example, a restaurant business that you start in the middle of the desert. Can it work? It can, but there's no foot traffic. You might get someone running through that desert once every 6 months to a year. And in that case, yeah, it's possible you'll make some customers or some kind of money or some kind of income because you're the only thing out there. But the reality is the odds are stacked against you. Now, if you have a restaurant in the middle of downtown New York or a city, your odds of success now become higher. So when you look at binary options, can you make money from them? Yes, you can. But is it favorable for the risk to the reward that you're getting? No, not really. And this is why I don't really care for it to say that it's a scam. But I do look at it as it's not really favorable. The odds are not in your favor, and more than likely, you're going to lose your money. That's the simple and short answer. Now, if we go deeper and look at understanding how they work, maybe it'll give you some insights to the whole process of the binary options. So the first thing I want to share with you is how binary options work. So there's a few factors involved in the working process, and it's not much different than a regular standard trade in the stock market that you would put on. First, you choose the vehicle that you want to trade. You pick a direction, which is a little bit easier in the sense that, when it comes to the stock market, there's actually a lot of hedging and things that you can do. With binary options, it's binary, right? So you have one or the other. You choose up or down. There's no hedging involved and those kinds of things. There's also how long. You choose the time frame. Usually they're short. 1 minute, 5 minute, 10 minute, 20 minute, 30 minute, 50 minute, an hour. They're not 10 days or 50 days. They're not a long time frame. Then you choose your size or your bet. And then finally, the return to player rate. So you check all these things. So if we were to take a look at a binary option kind of quote window, here is basically what it looks like. And I drew it out just so that I can avoid taking screenshots of any particular company. So you basically have this euro versus the US dollar, right? So you choose your trade vehicle. This is kind of the trade that you want to do. Okay, where are you putting on the trade? In this example, we'll be using oil, so I'll go ahead and highlight that. But you have your euro to USD, okay? So this is the trade you're looking at. And here you'll have kind of your graph or chart of what's going on and what's happening. And here you have your payout rate, right? So this is determined by them, what they're going to pay out, and when it expires. So it would be like 3 o'clock today. Now, you get to choose, okay, do you believe that at 3 o'clock today, that this is going to be higher or lower based on the chart, based on the graph at the end of that time frame. And it's got to be at the end of that time frame. That's when it expires. So you have now a call, which is similar to regular stock market jargon. You have a call that if it's higher, you believe it's going to be higher, you go ahead and buy the call. If you believe it's going to be lower, you buy the put or you invest in the put. So now what happens is if you're right, well, you get a 70% payout. If you're wrong, and it actually went lower at this time frame, you lose your full money. So take it this way. Okay, if you put in $500 and you're right, well, you take 500, you multiply that times 70%, okay, and that's your final payout. But if you're wrong, you lose that $500. Okay, so you get that point? Basically, you don't have any leeway in terms of taking half your position off or anything like that. It's either you're right or you're wrong. That is it. When it comes to oil, let's just use this one as an example. Same concept. You have a payout rate. You have what time it expires. You choose the call. You choose the put. You have a little graph. Then you also decide how many shares you want to trade or what size bet you want to put on. And that is it. Okay. Again, if you're right, you get that 80% instead of the 70%. Okay. If you're wrong, you lose your whole investment. Okay. When we look at evaluating risk to reward, so here's basically how binary options work. Okay, so the binary, you put the risk of $1,000 and the payout is 80% like we've discussed right here. You're going to get that additional $800, which seems like a great deal of money. Now, when it comes with standard options, what actually can happen is you're still risking, let's say, $1,000, but that reward can actually be $2,500. It can be $5,000. And you can also manage and reduce your risk, okay? So that's the biggest thing that you need to understand when it comes to binary options is that you don't have the leverage or the chance to reduce and manage your risk. When we look at the stock market, when you buy a stock, the normal tendency of that stock is for it to go up, right? Because a stock should be growing. It's a company. It should be growing in the future, especially if you're buying a big company that knows what it's doing, the management is there, the growth is there. The natural tendency is for it to go up. Now, when you're looking at also things moving against you in the stock market, if you want to go ahead and sell a part of your position, okay, you could go ahead and sell half, or a third, or a quarter. So let's say you buy a stock at $50. You could go ahead and sell half of your position if you had 100 shares a little bit higher, a week, a month, a year later. With binary options, you have that time. That time is set. And whatever happens at that time, you either win or lose. That is it. You cannot sell half, a quarter, a third. You can't hedge from the short side. And multiply the positions. It becomes more complicated because you have limited abilities. So think of it like trading. When you're trading blindfolded and you can't hear anything and nobody can give you information of what's happening with the trade, but you have to make trades. That's ultimately what's happening with binary options is your senses are completely blind. And the whole goal behind this business, when you own a binary company, binary options company, is for them to get you to trade more often and more frequently. The more trading that you do, the more likely you will lose out. Because remember, it's like setting up a restaurant in the desert. They know that with time, eventually the odds are stacked against you, and the odds are not in your favor. They are in their favor. But let me show you here on the evaluating the risk to reward what this ultimately means as you look at stocks versus binary options or even standard options. So let's take a look at how binary option plays out when it comes to the risk reward here. And what I want to share with you is if you're looking at a regular stock or options and you're getting into a position right here. So let's say this is your entry point. Okay, when you go into this entry point, now the stock can go up or stock can go down. If you're doing it on a binary options way, and I'll just go ahead and draw this in blue. So as this continues to move higher, okay, right here, your max profit right here, let's just say again, we're using $1,000, is $800 because it's 80% is the payout. That is your max, okay? You're maxing out right there. Now, when it comes to regular options or regular stocks, you don't have a time constraint, right? You can go ahead and allow this to continue to run in the future. Now, yes, you may have some pullbacks here and there and those kinds of things, but what you can ultimately do is allow those things to run to a higher level and higher point. And what you have to see here is that your risk to reward is much higher. So So when you look at standard options, right, look at the reward potential right here. The reward is huge. Okay, when you look at the reward for the binary options, okay, you're looking at a lot smaller of a reward. Okay, so if over here you actually made, let's call it $3,000, $4,000. Okay, it's a lot on your options, but you could let it ride, right? If you bought leaps or longer term time frames, and you don't have the stress of the time frame, the frequency of getting in and out of trades. Whereas here on your $1,000 investment, you had a potential of a much larger loss because you would lose your full $1,000 investment. So here you're risking $1,000 to potentially make 800, which sounds great. You know, for a lot of people, it sounds great. Here you risked $1,000 to make 3 times your money, $3,000. Now maybe it took a little bit longer, but it's a 3-to-1 risk reward. Whereas here, when you're risking $1,000 to make 800, it's almost like a 1-to-1, but the odds are stacked against you because of the time constraint. And you don't have the flexibility to manage that position. So here's the problem really when it comes to binary options is when you start having a stock right here, and again, let's say you get into this at this entry point, okay? So now what you're looking for is the expansion to the upside. Let's say things go against you. So now this stock actually starts moving lower. Now, in a regular stock, what's great about it is I can get out of this stock earlier, right? I can get out of this stock and say, okay, well, out of that $1,000 that I put in, out of that $1,000, I may decide, okay, I only want to take a $200 loss. Now, with binary options, there's no $200 loss. It's $1,000. You're losing your full investment. So you're losing your full investment. That is the biggest problem right there. That's the issue when it comes to binary options, is you're losing your full amount. You don't get to just say, hey, I'm getting out of this position at, negative 200. Okay. The other problem is that when a stock is moving up in your favor, here's the other great thing with stocks or regular options, even they are better than just binary options. You could say, okay, I'm going to sell half. Okay, so that way you sell half or a third or a quarter. And that way, if the stock starts heading back down to your entry point, at least you took half of your profits. With binary options, you really don't get a chance to do that. You either win or you lose. That's it. It's a binary system, two-way system, win or lose. That's it. Now, so many people are attracted to this, and there's a lot of different reasons. But these companies that allow you to trade binary options, they know their statistics. They know whether you're going to make or lose money. And they know that most of the time you're going to actually lose money. So that's why they can attract you with these higher payouts. They can attract you in all these ways. But why are so many people attracted to these things? Let's take a look. It's really quite simple. Binary options are easier to understand than regular stocks or options. There's more complexities to stock investing, choosing the right stocks, looking at dividends, even reading the charts, understanding the charts in much more detail. Usually people are just frustrated with regular investing, so they want to do something different. Maybe they just kind of gave up. So they start looking at binary options, and they are typically much more simple. There's only a few components. You choose up or down, you choose your size, you look at the payout, and that's what you get. So it does seem easier. However, the probabilities are against you, okay? So what happens is people get attracted to these things because of huge marketing pushes from affiliates, which means those people that are pushing these things get commissions, okay? And they get usually huge commissions. And a lot of times it's other binary option traders because they're trying to make their money back from the losses, okay? So if you get affiliates, if you get somebody to sign up under your account or your name, then you also will get extra trading credit. So let's say you put in $5,000 in your binary options account. Now you may have another $5,000 or $2,000, or for every person you get or bring in to sign up, you get an extra $1,000 that you can trade with. So again, it's a huge marketing push, and they have to constantly bring more and new people into the system. And ultimately, it attracts the people who want the fast money and it sucks you in for the get rich quick, right? So you can get rich quick. That's ultimately what they teach you and they show you, and that's how they attract you. From the cars, from this guy made $50,000 trading binary options, or a teenager can even do it. Here's the car you can own, or the vacations you can take, and you can trade while you're in your underwear, and you can trade while you're on vacation. And all these things really start to suck you in for the get rich quick, especially if you don't have a lot of money. If you're a person with less than $10,000 in your bank account and you're looking to really grow your life, expand your life, and then you start seeing these things that you get attracted to, especially if you're a person who's a little more attracted to spending or consumerism, then they start sucking you in, showing you different cars, showing you the money you can make, showing you a different lifestyle that you could have. And it starts creating this effect for the get rich quick positivity. And that's why people get sucked in, showing you how easy it is because you just need to decide up or down. So you can see that it really just plays on your human natural characteristics, the greed side. That's what it does, is it plays on your greed side to make money fast, to make money quickly, to change your lifestyle, to change your behavior. I can promise you that. And that's what they're ultimately doing. I mean, imagine right now if I said, hey, I can promise you'll be a stock trading millionaire if you just bought all my courses, all my books, and had 50 consultations with me. Go ahead, hit the buy now button. I can almost guarantee you most people will not. Maybe one or two will. But the thing is if I said something like that, it just sounds so ridiculous because I'm pushing you to the sale so quickly, right? To go ahead and buy everything right now. And when you start looking at those things, if I start, doing it a little bit more subtle, if I say, hey, buy my video course, and then you can have this Ferrari, or buy this book and check out the lifestyle that I have. If I went ahead and did that and started pushing these kinds of things, the environment that I would have on my channel would be completely different. And those are not the type of people I'm looking to attract. So for you, if you're able to push these get rich quick things away, then that's a good thing because you'll start seeing the perspective. And this is what ultimately happens, is a lot of people unfortunately get sucked into this. So if you're kind of on the fence, you're watching this channel or you're watching this video, there's no quick riches in the stock market. Can you do really well? Can you make a great deal of money? Absolutely. But does it take a lot of hard work? Oh yeah. It takes a lot of education, a lot of hard work, and of course working capital to be able to trade correctly. Not everybody can do it because not everybody is willing to look at things from an outer perspective. And this is what happens with binary options, is they suck you into this high of like a cocaine, a drug, and people don't realize it. It's like for me, I've never taken, any hard drugs or anything like that. But because I'm already aware and understand these things. And for you, that's what I want to do, is I want to tell you that, hey, this is not something you should be doing unless you really understand what's going on and what's happening. Because ultimately, can you make some money? Yeah, you can. But can it really blow up your account? Absolutely. So I want to let you know that, hey, this is something you need to be very, very careful about because it can blow up your account. And there's no quick riches. If you have a broken arm and you're taking pain medicine, you can get addicted to that stuff. The same thing here. These things can really damage your financial account. So be really careful. So you might be wondering, how do these people stay in business? How do these companies that trade binary options or allow you to trade stay in business? Well, first off, they save on fees from taking the opposite of your trade. So saving on fees is one way that they do it. They don't even put your trade into the system because they know statistically majority of these people are going to fail. Okay, so they don't even put your trade in the system. They just take the opposite side of your trade and that's it. Because eventually with time, as things expire, you're done. You lose all of your investment. Most of the time, that's what happens, and for some of the times they do have to pay out, but then you'll go ahead and trade more because you've made a little bit of winnings. And then again, you'll probably lose out on the next one if it's not the first one, or the third one if it's not the first and second one. And with time, that account starts to spin and dwindle down and down and down. And then what happens is well, if you want to trade more and you want more money in your account, we'll give you another $1,000 or whatever, if you just get one affiliate or one referral and bring us that. So now you have these people that start sending in these affiliates and referral codes. We'll give you that bonus money for signing up someone else. Or what they'll do is if you make 30 trades as an incentive, right? They force you they don't force you, but they incentivize you to trade. If you do 30 trades in the next 60 days, then we'll give you free trades, or we'll give you an extra $1,000. So again, they'll give you bonus money for trading more frequently. There's all these different incentives. And again, it just kind of incentivizes you to trade more frequently, right? Because the whole goal and why they have a 1 minute, 5 minute, 3 minute, 50 minute, 1 hour kind of time frame is so that you trade more often. And the more often that you trade, that slippage cost starts to happen. And if you've never heard of slippage costs, think of it this way, okay? Let's say I buy a camera like the one you're seeing or using right now in this video, and I buy it for $700, okay? Buy it brand new, call it today. 1 week later, I say I didn't like the camera, and I'll say, okay, I want to sell that on Craigslist. How much do you think I can get for that camera? It's probably not going to be $700 unless I got a really amazing deal, but if I bought it new, probably not. So I could probably get it for, let's say, even good deal, call it $680, right? So the slippage cost here, or the cost, was $20. And let's say I do this time and time again. Again, I buy the next thing, call it a laptop. And then I go ahead and sell it again on Craigslist, right? Brand new, a few weeks later, it was $1,000. Maybe I sold it for $900, lost another $100. So you can see that now I've lost $120 just simply by doing transactions. And the more transactions that you do, the more you lose money. That's why for many people who look to really preserve their capital and wealth, just a little quick insight for you, is they don't buy brand new cars, all the time. So they try to last with the car because the more transactions, buying, selling that you do, the more you lose out. Same thing with, laptops, cameras, headphones, speakers, all these things. The more transactions, the more slippage costs that happens. And that's what happens in these binary option systems is you basically do more transactions because they have that time constraint. The more transactions you do in the lower amount of time, the more money that broker gets from you because you're losing more money from these slippage costs. Because you're basically slipping on your transactions. You're losing out money. Maybe it's not the first time, but it will be the second time. If not the second time, it'll be the third and the fourth time. So that's what happens is you just constantly lose money, and it's called this churn effect that happens. So anyways, that's some insight for you regarding binary options, and whether it's a scam or a legit, you go ahead and be the decision maker. The thing is the odds are stacked against you when you look at binary options, okay? Doesn't mean you can't make money, but the odds are against you. As I used the example earlier, it's like trying to build a restaurant in the middle of the desert. Is it possible? Yeah. Can you do it? Yeah. Will you get maybe some foot traffic? Yeah. But will it be sustainable? Will you be able to survive out there? It's more than likely not going to happen. For most people, it just doesn't work out. And the longer they stay out on that desert, the more money that they just lose and keep pouring into the food, into the water, into just running and maintaining that facility. And this is what happens with binary options is with time, you're just losing more and more through slippage costs because you just don't have the luxury. The things are set up to be against you. So when you look at investing in a stock, the natural tendency is for things to grow, accelerate, whether that's through dividends, whether that's through appreciation, whether you're hedging to the downside if things go against you with other stocks, with gold. When it comes to binary options, it's all about getting you to trade more. It's all about, giving you that get rich quick high, get rich quick exposure. So that way you go ahead and trade more. And eventually most people lose most of their money in their account. Unfortunately, that's the sad part regarding it because we get so attracted to those get rich quick kind of mentality. We humans, we want to continue to evolve. We want to grow, and it's okay. It's natural. It's normal. I want to grow. You want to grow. We all want to evolve, whether that's our financial bank account, our personal, our health, our wealth, all these things. We want to continue to evolve. And I know that you may be struggling in trading. And if you are, just keep working at it little by little. Push yourself. Learn a little something every single day. And as you continue to do that, you'll continue to expand your horizons and grow. There's a lot of free videos on this YouTube channel. There's a lot of free videos on my website. I do have a lot of premium courses as well. I'm not saying you need to go out and buy them because there's just so much free information as well on my websites. But if you want to compress your learning, by all means, there's the education for you as well. And it'll probably cost you a lot less than you would lose on any one single binary trade. So with that in mind, thanks for joining me. Thanks for sticking with me. I hope this gives you some insights to binary options, what they're all about, and just some things to consider before getting into them. Can you make money? Yes, but the odds are stacked against you. So be very careful as you get into this kind of industry or business. For me, I always like getting into things that the risks are not in somebody else's favor, where the reward is more in my favor. Those are the kinds of trades, those are the kinds of investments that I prefer to get into. And I hope you do the same. So thanks again. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.